Hey everyone, welcome to the first episode of our Contra Investing Series, where we look at strong businesses that are temporary out of favor, but quietly getting accumulated by smart money. And today we are starting with a very interesting company. It's Sona BLW, also known as Sona Comstar. I remember covering this company in detail on my YouTube channel in the past. If you look at its share price, company launched its IPO in June 21 at 291 rupee. Thanks to the bull run, in no time the stock was up around 3 times. But since then, the stock has gone through a roller coaster ride and it is still much below its December 21 high. So it's been a long painful period of almost 4 years since the high. In today's video, we'll review Sona BLW using our 4-point contra investing framework that we discussed in our previous video. If you haven't watched that video, I would recommend watching it because in that video, I've set the context for starting this series. The core idea behind this series is to discuss businesses that are going through temporary problem and the stock price is corrected significantly. As a result, retail investors are losing their interest, but smart money from institutional investors are slowly accumulating them. Alright, let's put Sona BLW in our 4-point contra investing framework and identify if it qualifies as contra bet or not. In the first point of our framework, we try to identify if the business is fundamentally strong or not. And here, we look at 3 key points: business model, management, and balance sheet. As far as Sona BLW business model is concerned, it is not your regular auto ancillary company that sells commoditized parts. Its focus is on high precision, technology heavy mobility components, like your differential gears, that helps a vehicle's wheel rotate at different speed while turning and giving smooth and stable driving. Then its components include EV traction motors that actually power an EV's movement, like the engine of an electric car. Then other components include motor controller, that are brains of EV car powertrain that control how much power the motor receives and decide the speed, torque and efficiency. Then its component include final drive assembly, which is the last stage of drivetrain that transfer power from the motor to the wheels. That also include Novelic sensors plus software. These are advanced radar sensing and software systems that enable ADAS, safety features and intelligent vehicle control. Their products find usage across passenger vehicle, commercial vehicle, buses, off-highway vehicle, electric two-wheeler, three-wheeler, non-auto segments as well as humanoid components. And the most important point, as of FY26, currently 30% of their revenue already comes from EV. And look at the increase in EV segment contribution. This means they are not dependent on the old internal combustion engine cycle. The business has presence across the world that includes 7 out of top 10 global OEMs as their client, 3 of world's top 10 commercial vehicle OEM, 7 out of top 10 tractor OEMs as their client, 3 out of world's top 10 EV OEMs as their client. The robustness of their business can be gauged from the fact that their order book is 6.8 times their FY25 sales. Second subpoint is management quality. So when you look at Sona BLW, one thing that stands out is that it's a professionally run company, not a typical promoter-driven setup. The CEO, CFO and most of the leadership team comes from strong global automotive background, which is why the company scaled so fast in EV drivetrain, precision gears and advanced components. In fact, you just watch the leadership interviews and read the con call. The clarity they provide with latest update and transparency is excellent. They've clearly explained the challenges that they are facing currently. That we will discuss it in the next part. Yet we also need to address the elephant in the room. So recently there was a family dispute after the unfortunate passage of Sanjay Kapoor, who is the former chairman of the company. This created a lot of noise in the media and naturally investors got worried. The concern was, will the family feud impact the governance of the company? Will it impact business operations? So here is the important part. The dispute was at family or shareholding level, not at the management or operational level. The company continued to be run by an independent professional board with global executive. And that's where no business disruption, no change in strategy and no operational instability was reported. The promoters still hold a meaningful stake, but they don't interfere in day-to-day management. In other words, while sentiment took a hit because of news flow, the core governance structure of the business remained intact. Third sub-criteria is balance sheet. Sona BLW has a clean balance sheet. It has virtually zero debt, a very healthy cash flow from operation and stable working capital. Then one important aspect to check business stability is to look at company's margin. If the margins are too low or too volatile, it means company does not have pricing power and the business is commoditized. But in case of Sona BLW, company continued to command a solid 25% margin, and it's also very stable without big fluctuation. In fact, other auto ancillary company operates at half the margin of Sona BLW. That clearly suggests Sona BLW has a strong command over the pricing and its products are differentiated. Otherwise, you can't command a 25% kind of margin. Overall, on first criteria of contra investing, Sona BLW business model is great, business quality is solid, and balance sheet is very healthy. So fundamentally, Sona BLW is a strong company. Now let's look at second criteria of contra investing. Next very important aspect of contra investing is to understand whether the issue is temporary or permanent. So if you look at company's revenue, it grew at a much faster rate during 2020 and 21. But of course, 40 to 50% growth is not sustainable. However, the revenue growth kept on falling to current levels of 7% in trailing 12 months. Likewise, net profit growth has also dropped significantly. This sharp drop in earning growth was one of the biggest reasons behind fall in Sona BLW share price. Now there are broadly 4 key reasons behind this correction. If you read their Q1 con call, management has clearly highlighted those factors. First reason is there was change in supply term with the EV customer in Europe, which affected the revenues. Second, one of their large global customer has seen a sharp decline in sales due to a slowdown in demand. Third, since 8th April, China has stopped the supply of heavy rare earth magnet to India. This shortage of magnet has affected the production of EV traction motors in India. Fourth, the uncertainties surrounding the US tariff have led OEMs and Tier 1 customers to slow down their procurement processes somewhat and maintain low inventory levels. The good thing is, all these reasons are temporary. These issues are industry-wide and not specific to Sona BLW. For instance, on rare earth magnet issue, management has updated that they have successfully developed and tested rare earth free traction motors. The performance of these motors have been tested in the lab in actual road conditions and found comparable to existing technology. If this rare earth free alternative gets approval from customers, it can be a big win for the company. Then US tariff on India is also temporary. In fact, the recent news suggests that India and US are close to finalizing the trade deal. If that happens, companies that fell down due to US tariff issue will rebound sharply. In fact, there's a silver lining to all these challenges in the industry. It has created opportunities for strong players like Sona BLW. In the latest con call, management mentioned that in the past 6 months, 3 of their direct competitors in Europe have filed for insolvency proceeding. This has resulted in an unprecedented increase in inquiries from European customers. Hopefully in the next few quarters to come, we can win significant new orders from Europe, add them to our order book. Now let's look at the third criteria of contra investing. Now the next important question is, what about the future growth prospects? Is the long-term demand intact? So first of all, EV mega trend is fully intact. Yes, there's a temporary slowdown in EVs globally, especially in Europe and the US, but look at the 5-year or 10-year projection. EV penetration will keep rising. Hybrid plus EV mix will expand. Premium OEMs are doubling down on electrification, and Sona BLW is directly sitting inside the EV drivetrain. So when EV volume recover, even normalize, Sona benefits immediately because it supplies core component, not peripheral parts. Then third driver is company's entry into software and sensor and ADAS. In 2023, Sona BLW acquired 54% stake in a Serbian company, Novolic, for $40 million. It expanded the scope of Sona BLW from auto component manufacturer to tech plus electronics. Sona's future product portfolio now include radar sensors, perception software, control units, embedded ADAS solution. This helps Sona evolve into a system supplier. This is a high margin, high tech segment, much more premium than the traditional auto components. Overall, the long-term demand for Sona BLW remains intact. In fact, it looks very exciting. Now let's look at the final criteria. Now the final check is, what about valuation? Actually, there are 2 key reasons behind 4 years of underperformance of Sona BLW. First was a slowdown in earning growth that we have already discussed. And second reason was the insane valuation during 2021 bull run. During that time, its PE ratio touched insane level of 200. EV to EBITDA crossed 100 levels and price to sale at around 30. I mean, how can you expect a company to create wealth after touching such a crazy valuation? No matter how great a company is. Fast forward today, the PE has fallen to levels of 50, which is now below the median valuation, still not cheap. EV to EBITDA is also below median, around 30, and price to sale below 10. So overall, valuations have certainly cooled off a lot. Here please note that considering the strong fundamentals, order book and your leadership in the domain, Sona BLW would certainly command a premium. So you can't expect another 50% correction in valuation for PE to touch levels of 25. But even from current level, we can't expect extraordinary returns as valuations are not very cheap. Still good enough to generate decent return, provided the earning growth comes back. Now if you look at price volume action, Sona BLW has sharply recovered from October 25 lows, crossing both 50-day moving average and 200-day moving average. Still, 50 DMA is below 200 DMA. So the upward trend is not established yet. One last hack we can use is to check are institutional investors showing confidence in the company or not. So if you look at total number of shareholders in the company, it peaked out in March 23 at 4.8 lakh. Since then, public holding has reduced as well as number of shareholders. Except for September 25 quarter that witnessed an increase. But net-net, weak hands that already hold very low stake have further reduced stake. And DIs are consistently increasing stake. If we ignore December 22 to March 23 holding, because that was mainly promoter selling, still DIs are net buyers. FIs did increase their stake between March 23 till September 23, then it was mostly constant. But recently they have reduced some stake. But that was acquired by DIs. So one thing is clear, domestic institutions are accumulating stake and the weak hands of public have reduced stake. So that is again a positive signal. Now let's conclude. So if you look at 4 criteria of contra investing, Sona BLW has strong fundamental, no doubt about it. Then the problem is temporary. Of course, we need to track when the earnings would recover. Third, long-term demand is 100% intact. And fourth, valuation reset has happened, but still not to an extent that stock looks cheap. Considering all these factors, Sona BLW fits perfectly as a contra investing candidate. Yes, there can be further consolidation in near term if the earning growth disappoint. But those who would keep patience and remain invested for long term or utilize correction to accumulate slowly should get rewarded in the long term. So that's it for this video. I hope you will find it useful. I would love to know your take on Sona BLW. Also, there's a long list of companies that I would be covering in this Contra Investing series. So stay tuned and do share this video in your circle, and for more such deep dives, do subscribe to this channel. I'll see you next video. Till then, take care.